Hey everyone, let's say you risk 1 rupee in the market and you make 5 times that money. How good would that be? So today we're going to look at 3 stocks where the risk that you're going to take is just going to be 1 rupee, but the reward we're going to get is 5 rupees. Okay, so if you invest, let's say, if you're taking a risk of, let's say, 1,000 rupees, you might make a reward of 5,000 rupees. So 3 stocks, 2 from the automobile space and 1 from the IT space. That's what we're going to look at today. But as always, let's start off with the Nifty Outlook and let me give you a short perspective as to what's going to happen in the next week and what's happened in the past week. And then we'll take a look at the 3 stocks and we'll analyze from a technical perspective what the charts are telling us. Okay, so let's get started. So I have the Nifty Outlook in front of me, and here last week we discussed that Nifty is forming a doji the last week, and for me that was not really a bearish sign. A lot of people were saying Nifty is done, we're making a top. They were drawing diagonal lines and they're saying it's going to go down. But just analyze the weekly charts will give you a very good perspective, because weekly charts tell you the entire picture of what's happened in the week. Now, if you look at that previous weekly chart that we had first a long wick on the green candle, and then we had a doji formed last week. Now, for me, that's definitely not a bearish sign. It wasn't a bearish sign because after 4 weeks, it was just a pause, and then we had a beautiful rally this week, and the stock and the entire market is setting up very well, because on Friday, the broader market or the small cap and mid cap index also participated, and we are going to see some good gains going forward. So overall, this is just a breakout week that we had, and it's just a continuation of this entire move. It was just a pause a few days, and the market is extremely bullish, and we might see some all-time highs anytime soon in the next coming weeks or coming months. So having said that, let's take a look at the stocks for today, starting with Sansera Engineering. Now, Sansera Engineering is from the automobile space, and this stock was recently listed. It's a beautiful company, fundamentally, technically very strong, and we might see some really good returns here. Look at the sales growth that here the company had in the last 3 years or so, right? It has a sales growth of 8% CAGR, and profit growth has been growing at a 15% CAGR in the last 5 years, and 3 and 4% CAGR in the last 3 years. Now, these are excellent numbers from a fundamental perspective. The company has been doing very well, in spite of some of the companies in the automobile space were not doing well, but this company has done excellently well. So ROE, ROC and ROA around the 14% mark. PE is around 29%, so decently valued, a small cap company around 4,000 crores market cap. So looking at the charts here, this company was listed last year in November. So this is a 1-year chart that we have. The company history itself is just 1 year in the markets. But there's a beautiful setup that we're seeing here. This is a beautiful symmetrical triangle consolidation, right? A symmetrical triangle is nothing but a triangle like this, where you have multiple touch points on top and multiple touch points on the bottom. Now remember, trend lines, when you draw trend lines, they have to have at least 2 to 3 touch points to consider it a very significant trend line. Now, if you have 3 touch points, that's a significant trend line. And here we have 4, and here we have 3 touch points. And we've had a strong breakout on Thursday and Friday, with some huge volumes coming in. So big institutions are buying this stock, and they have been accumulating this stock for the last 1 year. So overall, this stock is looking fantastic, and we might head higher from here. So you can buy the current market price, which is around 790. Keep a stop loss of 9%, which is around 720 odd levels. And targets are going to come to around 1200. Now that's almost a 50% return from the current market price. And if the market stays stable, we might see some very good returns going forward. But overall, I do not see this stock going below 720 in the near term. Probably also in the next few months, it might not go below if the market overall remains healthy. So that's the first stock. I know you're going to have a lot of stocks in your portfolio, auto stocks. Do let me know what you have in your portfolio in the comment section, and we can also discuss that as well. So the second stock for today is not a great company like the previous one we discussed. It's a pretty average company, in fact, a bad company in terms of fundamentals. Sales degrew by a 14% CAGR in the last 3 years. Profits also degrew. So let's not take a look at the fundamentals, and let's take a look at the technical as to why I am discussing this stock. Because remember, some companies, even the burst companies, can be bought at a good price, and I believe strongly in this. And good companies can be bought at a bad price. Now, what does it mean? You can buy a TCS at a very high price, which is a very bad price. But you could buy companies like this at such a low price, which could be a good price for you in terms of investment, right? Now, the charts here tell me that this stock has been trending in a parallel channel since many decades. Now, this is a chart since 2000 odd levels, right? So since the year 2000. And since this COVID crash, we came and retested this channel over here. Kind of had a strong rally back to 180 levels. Now remember, the stock fell from 300 levels to almost 50 levels. We went back to 180. That's a 3x move already, but we corrected, came back all the way to 100 odd levels. Now this is just a 100% move still from the bottom, and I feel that if the auto space does well, stocks like Bunjal Showa will not be left behind, and they will be taken along. and the stock might do well, at least for the short term to medium term. So it's not a very fundamental long term investment pick. You might want to consider and review the fundamentals every now and then. But for me, this is a pure fundamental technical pick. And if once the stock gives me decent returns, I will be out of the stock. So considering this zone over here, if you see, we've had a beautiful 9-month consolidation base. That's what we call accumulation, right? Now, if you see after this crazy move, stocks tend to fall, and this stock corrected quite a bit, and we had this beautiful base, and now the stock might head higher. I'm going to zoom in here, show you what's happening in the weekly time frame. Now, this is that move since COVID, and then we had this fall. Now, this stock has been in a clear downtrend since July 2021, and the stock is now breaking out of this beautiful rectangle consolidation. Now, this is a 9-month rectangle consolidation, and we are seeing some spikes here in volumes, which means huge accumulation is happening by the FIs or DIs, I don't know, but someone is accumulating who has big money, right? And this stock has given a beautiful breakout this week after many weeks, right? We had an attempt here, but then it went sideways correction, and now we had a strong breakout this week, which means gives me the confidence that the stock will head higher, which means you can buy the stock at current market price, 110 rupees. Keep a stop loss also here at around 9% stop, which is around 100 rupees, and we're looking at targets of around 170 rupees in this stock, which is 6 times the risk. So these are two automobile stocks that I want to discuss today. But the most interesting stock for today is KPIT Technologies from the IT space. Now, the entire IT space has been correcting in the last 1.5 years or so. Now, it had a crazy rally post-COVID, and the stock, the entire index corrected for the last 1.5 years or so. It did get into a strong correction, and some stocks fell really bad. Some stocks fell and recovered quite fast, like KPIT Technology we're going to discuss today. So it's a beautiful stock to look at because the fundamentals are excellent, technicals are excellent. That's why I'm recommending this. So 3 years sales growth of 56% CAGR. Now that's some brilliant numbers, right? Profit at 50% CAGR. And then you have ROE at 24, ROE at 21, and stock PE is still at 62. It's not really overstretched or highly overvalued. It's okay, decently valued for an IT company because it has its own niche, and that's why the market is giving its high PE. So having said that, the technicals also look excellent. If you look at this here, I have this 2 arrows here, which is the trend line, which I'm drawing connecting that points over here. And for me, this is a beautiful line or trend line to act as a support here with some beautiful volumes coming in. Volumes have been massive. I mean, they are so bullish that people are buying huge quantities of KPIT here. Ideal entry point was around 570 odd levels, but we missed that. But now the stock has been correcting for the last 5 weeks, and I think the stock can head higher from here again. Okay, so we see this doji over here, and then 3 weeks of sideways, 2 dojis again, and now this week we had some nice volumes coming in with some good green candle again. So overall, you can buy the stock now at current market price, and here on the daily charts you can also see that the stock had a downtrend breakout, and this is the recent consolidation that we're seeing last 5 weeks, and the stock has been correcting here quite a bit. But look at those candles that we are seeing, right? So massive candles coming in with huge volumes. Now that's a very strong bullish sign for the stock. Now there are people buying and pushing the stock really high, and then there's a nice pause in the entire move, and then again there's a move, again a pause. Now this can continue again. We might see a few days of pause here, and again probably head higher, but the stock will definitely head higher from here. Okay, so you can buy the stock at current market price. Keep a stop loss of 650, which is around 9.5%. All the stocks today we're discussing is below 10%, so very low risk setups. You can also do a swing trade, book at 20% returns, and trail the rest for 30% or 40% returns as well. So targets of 1100, which is around 50% returns from here, and this is the third stock for the day that I want to discuss. Now, if you like all of my stock recommendations, and if you do like my analysis, don't forget to subscribe to my channel, and don't forget to like this video as well. Otherwise, I leave you here. Take care, stay safe, and trade safe until I see you in the next video. Bye-bye. Take care.